Morning everyone, Phil from Northern Accountants. I hope you're well. Just a little update on the business bounce back loans. They've now been open for around a week. We haven't gone public with anything before really, apart from on Facebook Live a week ago or so, last Friday, about the business bounce back loans, because we were waiting to see how the process all panned out, what would be available, because again, up until Monday morning at 8:45, nobody even knew what was going on. I think some of it wasn't even released till mid-morning that day, so it was difficult to give any sort of direction on it. So it's been up and running for about a week now. It seems to have been very successful in its outset. Santander and Lloyds certainly won the reputational race. I heard that Santander, an application was made at 9 o'clock Monday morning and it was paid out by 4 o'clock in the afternoon. We've taken a Santander business bounce back loan and ours was very similar. I think we were paid within 36 hours, so that's fantastic. And also Lloyds have got some great credibility. NatWest is starting to follow suit now, a little bit more clunky, a little bit more regimented, but it's starting to get there, and the other banks are now coming to the table as well. The positive news about today is Starling Bank have now come to the table, and they're able to deliver bounce back loans, and that is for people whose main banks aren't one of the accredited lenders. So somebody like a Handelsbanken or somebody like that, they've declined to get involved in this, which basically left those main account holders with nowhere to go. So Starling Bank is now an option. All you need to do is open an account, which I can vouch for personally can be done in under 4 minutes. I opened mine last August on a sunbed in Tenerife in 4 minutes, just needed a driving license. You probably need a little bit more information for a company account. I've not opened a company account as yet, but I'll be switching all my banking to Starling at some point in the future, because I think it has been excellent so far. And then within the Starling Bank app, you would make the application. So again, in this company and email, there are links to all the main banks that are out there. Your NatWest, your Lloyds, your Santanders, your Barclays, your Yorkshire Banks and people like that. There's a link in there, and there's also a link to Starling Bank. So there's some good opportunities in there. So that's how you go about and make the application. So I have a few views on the business bounce back loan, and I'm of the opinion that you should apply for one and you should get one. And I know that some people say, yeah, but I don't need one. I've got plenty of cash in the bank, I can get by and we'll come out of this. But the world's changing. We don't know what the future's going to look like. It's massively going to be different to what we thought, and what we've got in the bank now might not be available, might not last us. So I absolutely think that you should do it, because ultimately cash is going to be king in this situation. So one, you'll need the cash to potentially take on the issues that arise in the coming months. I think for the next 12 months at least, we're going to be struggling. The world's going to change, things are going to be different. The way that we operate and is not just going to go back to how it was. And then the other reason to take the cash is because it will help you realise opportunities that will undoubtedly arise. So there's going to be a massive opportunity to increase your market share going forward, because competition is going to have folded. Acquisitions are going to become available. You're going to be able to get bulk buy discounts. There'll be fire sales. There'll be quality team members that are available that might have been previously out of the price range but no longer are. You're going to need to invest in your marketing and things like that. We've invested, you'll probably notice, we've invested quite heavily in marketing, and we spent more in April than we spent in January to March, and we continue to do that. So again, these bounce back loans facilitate the ability to take advantage of the situation that we're going to find ourselves in. So the businesses that survive also need cash to then to go on and thrive. So I genuinely massively believe that it's a good opportunity to take these bank loans. Now obviously what I'm not saying is just to go and waste it. I mean, at the worst case scenario, you could put it in another bank account. National Savings, for example, will give you 0.7% interest, so you could bank it, get 0.7% interest, and then pay it back. Made a few quid and you haven't actually done anything, because there's no payments for 12 months. There's no interest for 12 months. And then when you do get it, the cash is the cheapest you're probably ever going to get. It's 2.5%. So that's probably better than some mortgages that you can get out there. So you've got to think about that. So I think taking it is a must in most situations. The other thing to think about is that money could be used to refinance debt. So you could use that to refinance any debts that you've got any personal guarantees on, because let's be honest, businesses may fail. Some of us sat watching this video might not survive this. And if you've got personally guaranteed debts, the insolvency companies will come for you for it. So you could take that £50,000, up to £50,000, and pay off a funding circle loan. You could pay off your bonds on your leases. You could pay off all sorts of things. Anything that you've got a PG on, an overdraft, a bank loan, anything like that. It's certainly something to think about. The other thing, I think there's another reason to take the bounce back loan is a lot of you, like me, will have a director's loan account that's in credit. So your company owes you a significant amount of money. Now, if your company goes bust, you lose that money because you won't get paid it. So what you could do is draw that money down out as a loan and then take it out and put it into your personal bank accounts, and that will offset against the credits in your DLAs. Now, that does one or two things. If it does go bust, you've been paid, you've got your money, you've got some personal security going forward and to protect you and your family. Or alternatively, you can always put that money back in. You know, if you wanted to pump some more money back into the business, if that money's sat in your personal bank account, then you can put that back into the business in the future, but it's not being ring fenced or tied up in any insolvency. So I do think if you've got a director's loan position, it could well be worth clearing that down and doing it that way. So that's if you've got a director's loan that's in credit rather than one that's overdrawn. I'm not advocating in any way, shape or form that you increase your overdrawn director's loan account, because as I've said before, if you do that and it's found that the money is spent misappropriately when it comes into liquidation, they could well lift that sort of 100% guarantee that the government's providing and come back to you personally for it. So as long as you use it in the right way and doing the right things, I think there's some answers to a director's loan account there and things like that. So in terms of bounce back loans, that's about the size of it. One of the other things that I mentioned in NA Live was, in the NA Connect group, was the CBILS and the fact that Funding Circle had now come to the table. Now, a lot of people may not be aware of this, but what Funding Circle are doing, they're now providing CBIL loans for people that have had it rejected by the main banks or don't have a main bank. So what they're doing is they're offering loans up to 250,000, which are 100% personally guaranteed. Now that is, 100% guaranteed by the government. Well, effectively it's 80% guaranteed and 20% you can't put a PG on. So anybody who's got a Funding Circle loan will know that their model is that you sign a personal guarantee for that money. So prime example, we took a Funding Circle loan out to top up the cash we needed to buy our Ilkley office. So I am personally guaranteeing that debt. So what I could do under the CBILS is potentially draw down a CBILS loan and refinance the existing Funding Circle debt, which Funding Circle are on board with doing, which would remove the personal guarantees from me. So not only will it protect me personally from the exposure that I've got on the full loan for the personal guarantee, it will effectively wipe out any PG that I have. It will give me a 12-month payment holiday. So again, that will give me instant cash flow over the next 12 months. So I think our loan repayment is something around £5,000 a month or something like that. Over the next 12 months, that'll put these 60 grand in my bank account that I don't have to pay, because it'll just build up, because that's what I was used to paying on the loan payment anyway. And then basically what it might do also is it might be able to bring the interest rates down as well. So there's some really good opportunities within Funding Circle that I would implore you to look at and take advantage of. If you want that, you can't go direct to Funding Circle and get this. You have to go through an accredited broker. One of our partners through NA Money is an accredited partner, and we've already had 4 or 5 applications go through this for those that were on the NA Live and NA Connect the other day. So if you are interested in that, there's a link in the email to email me directly. Just put it in the subject saying Funding Circle refinance, and then we can pick up from there and we can talk about what needs to be done in there. There's a little bit of paperwork to be filled in and things like that. No certainties, no assurances like anything else. It's assessed on credibility. But again, what it doesn't ask for is future forecasts or anything like that. What they've taken the view of is, show me your last accounts, and then we believe in 12 months you'll be back to where you was. So if you can afford it, then you'll be able to afford it in the future. So that's how they've done it. So it's a very, very relaxed way. Funding Circle are massively behind it, because again, all their debts are going to be 80% covered by the revenue as opposed by the individuals. So which is obviously a lot easier to recover from the revenue and the government than it is from you and I or things like that. So definitely something to think about. So I implore you to look at that. That's about it in terms of the loan sort of things for now. Boris Johnson's making well, he will have made it by the time you see this, but he's making it tonight at 7 o'clock. So I will put my thoughts out about that if there's anything worthwhile talking about in the morning. So I hope you have a great day. I'll speak to you soon. Take care.